Prosper Trading Academy CEO Scott Bauer joins us now from the CME. It's so interesting to me as we talk about the balance between OPEC nations, particularly Saudi Arabia, and then the U.S. shale producers, and the sort of narrative that OPEC has less power now. It's not really intact, I guess, as we see oil prices continue to go up.
I mean, the market is certainly reacting to that right now in over the last month or so. In the long run, though, we're going to have to see how this plays out. And I really think that we are at a big pivot point here between the pullback in production coming out of OPEC, coming out of Russia, what's happening with Venezuela and Libya, to the massive production that we're having here and the continuing demand issue, the slowing global demand issue. So when I say we're at that pivot point, Julie, we're trading, 64-ish in West Texas, just over 70 in Brent here. There are definitely tailwinds behind that right now. However, in the coming months here, we're going to make a break here. And when I say make a break, we're either going to head towards 70 or back down well below 60, in my opinion.
Well, Scott, help me understand something a previous guest has shared with us. Do you watch the spread between West Texas and Brent?
I do.
And what does that imply to us as it tightens?
So really, to me, it's more of a geopolitical risk type of event than anything else. So right now we're at $7-ish. We've seen it as high as 10, 11 in the recently. We've seen it down as narrow as about $4. So we're kind of right in the middle here, and this is typical. When that spread widens out, typically that's because we see Brent rise. Not so much because West Texas is selling off, it's because Brent is rising. Typically that comes on the heels of a geopolitical event coming out of OPEC, coming out of that area of the world. When it narrows, it's usually when things are a bit tamer, so there's not those geopolitical events. So what I would look for is a narrowing. I don't think we're going back to $10 here. I don't think we're going back to 10, 11. I would think we're going to get a narrowing here, but that's going to be because Brent is coming down, not necessarily because we're seeing Brent rise up or because West Texas is changing either.
Scott, if you could sort of connect the dots for us on gasoline prices as well, going into the summer driving season, what's the usual lag between this kind of increase in crude and where we see it at the pump, and how sustained is pain going to be as people start to go on their spring breaks and summer vacations?
Well, it's pretty painful already, Julie. And in fact, if you look at the EIA data, we're seeing, builds for out there. And if you look at gas, though was a huge drawdown. So we're seeing that big disparity there. And we're seeing, just over the last month, gas is up about 10%. That's a little early in the season. And that really is worrisome to me, because we may be in for a major shock come, the driving season around Memorial Day and into the summer if this drawdown in gas continues like this.
Is the flooding we saw in the Midwest and the impact it's having on ethanol production and shipment, is that going to also, are we seeing that already in the drive up in the price of gas? I think in California it's already over $4 a gallon.
It is, and Adam, that's a really good point, because I know there's been some issues, with getting oil and getting reserves out of the Houston area there, so that definitely is an issue here. So maybe that has accelerated the timeline a little bit of what we've seen over the last month or so. But still, this huge drawdown, this is not going to be good for consumers at the gas pump over the next couple months into the big driving season.
All right, Scott Bauer, thank you. Appreciate your time.